I know I'm wonderful, but any questions from yesterday? You just covered my kind of, you just missed my, and we didn't even tape it, so you can't even watch it back, my exhortation to. Schedule for today, finish off the 3 other attribute standards. What was the one that we did yesterday?
Purpose, authority, responsibility.
Number?
1,000.
Well done. Excellent. You can go when we've finished. Okay. And then we're going to look at some internal control and risk, or start that section, we're going to look at the control frameworks. Next week we're going to look at risk, fraud, and then some of the elements of part of section C, which is some of the elements of delivering internal audits, where the syllabus picks out a few of those different elements. Okay, so we're still into our proficiency level, so that's knowledge, understanding, ability to apply. Attribute standard 1100, independence and objectivity. We've talked about quite a lot, and we're just going to kind of get the wording in that the IA uses. Internal audit activity must be independent, and internal auditors must be objective in performing their work. I said yesterday that the IA sort of splits it in that way, the independence being about our position in the organisation, reporting lines, so that we are seen as this entity that can deliver the objective assurances, because we haven't got executive responsibilities, for example, in the organisation. And also, it helps with our objectivity around, we're not subordinating our judgment to that of others. And it's quite important, the reporting lines are very, very important. We talk about functional and administrative reporting. And I'm guilty from yesterday, who was sitting there? Emma asked the question, didn't she, about reporting lines, and I said I'll answer it when we do this section. She's not here now. What was the question?
So is the board, the executive board of the BXD?
Who's the key?
Yes. Okay. Yeah. Okay. So we will cover that as part of it. And then you can feedback and tell her I answered the question, but she should have been here if she wanted to know the answer, shouldn't she? Independence, freedom from conditions that threaten the ability of us to carry out our responsibilities in an unbiased manner. So that is all about pressure from senior managers, from executives, in terms of what they might do. It talks about direct and unrestricted access to senior management and the board. Senior management, obviously being the executive side, chief executive, finance director, ops director, etc. And the board, as well as the audit committee. The standards were changed relatively recently to include that the chief audit executive must have direct interaction with the chair of the board, as well as the audit committee. So that its direct interaction might be a regular meeting, or it could be an annual meeting. It might be that the chief audit executive at key moments, for example, when the annual reports and accounts are being discussed, attends the board meeting. But the audit committee, and a good audit committee, will have a chair who will be a non-executive director, who is likely to sit on the board anyway. So therefore there is a kind of a flow of information as far as our internal audit responsibilities are concerned. If there are any concerns that the chief audit executive has over the role of the chair of the audit committee, i.e. not passing up the messages or escalating the issues that have been identified at the audit committee and through our audit committee, our internal audit work, then there is a role for the chief audit executive, or a way that the chief audit executive can go straight to the chair of the board, chair of the organisation. Generally, this is achieved through the dual reporting relationship that I've mentioned, and that's about that functional reporting as an internal auditor, and my administrative reporting, which could be to anybody within the organisation. If I'm the chief audit executive or the audit function, it might sit in finance, report to the finance director. It could sit in operations, could sit in the governance teams, etc., etc. So a director who is my line manager or my supervisor or my manager, who will provide my performance reports, sign off my expenses, and those types of administrative activities. Where do you sit in Barclays? Which directorate do you sit in that sense? Bottom. At the bottom, yeah. Who do you report to as it goes forward in terms of who writes the reports, the performance reports to your chief audit executive? Where does it say? So do you not, or does it? Is there not somebody in the executive team who manages internal audit? So finance director, chief executive.
We've got a chief internal auditor, but then she reports to the board audit committee.
Yes. But who signs off expenses and performance reports for that person? For her?
God knows.
Nobody?
So the question is, who signs off Sally's expenses? Is that the question?
Sort of.
So
Yes.
the chairman.
Okay.
The chairman of the audit committee.
So if I look at this, so I look at this.
Janice probably.
What generally happens is the chief audit executive will have this functional reporting line as an internal auditor, and my findings from my internal audits to the board of directors, maybe to the chair, or to certainly to the audit committee, and then through the audit committee to the chair. Yeah. So but then also there is what we call an administrative reporting, or what certainly the IA call it, which is somebody in the senior management team manages the internal audit function or has them as part of their responsibilities. So if I looked at the organisation chart, where does internal audit sit, is what I'm saying. Is it a separate entity that doesn't have that dual reporting? Or so does the chair of the board write the performance appraisal report for the chief audit executive, or the chief internal auditor, chief audit executive?
That has to be the audit committee do that. Yeah.
So the chair of the audit committee write the report for the chief. So that's
what
your
they're responsible to.
The
Yes.
CEO and the CEO probably.
No, she's.
No, it's definitely the audit.
So I think Sally will respond to just study for
Yeah,
stuff.
me
But
too.
then she will
respond to who? Sorry.
Just Sadie, who's the CEO.
Oh, the CEO.
Yeah. But
Yeah.
then
Which is- absolutely. So that's really what I'm getting to.
yeah. But I think she will respond to mine actually
Yeah,
for the
I think that's right.
functional
It's not just.
relationship.
I don't think it'd be just Sadie.
Yeah,
That's the point.
Admin. Only for the admin.
She doesn't report to just Sadie.
yeah. No, she does. It's here on the charter thing.
Does she?
Was it Sadie?
Administratively to the CEO and the board.
Is that the charter?
Yeah.
Can I have you?
Yeah.
The idea of having the separate reporting is that the chief executive or the finance director, whoever it is you report administratively to, can't say, don't publish that report. That's the idea, because the reports are for the board and the audit committee as a subcommittee of the board, and then the board of directors. So that's our functional internal audit reporting. In most cases, including Barclays, there will be somebody that you report administratively to. It is quite an interesting relationship though, because the chief executive or the finance director who we're reporting administratively to might not want us to report some of the things that we've reported functionally to the board, because it might be embarrassing to them, their particular director, or to how they're performing, depending on what it is that we're looking at. So the separation is quite important. So, and you have the separation here. What's interesting is that the fact that your functional reporting is to the board, and you know that and you're confident with that, means that it's obviously well embedded. I'm just being nice about you all now. In terms of, we don't recognise it as that. The danger comes when our functional reporting goes through the chief executive or through the finance director, which means that we haven't got what certainly the IA or I would consider to be an independent reporting line. So the separations is really quite important. The functional as an internal auditor, the administrative as a member of staff, and that's really, so ultimately we all report. The fact that your chief internal auditor reports directly from an admin perspective to the chief exec shows the status of internal audit. Often in organisations it will be through another director, so through the finance director or through the procurement manager, commercial manager, whichever director, So the fact that you're reporting as an equal to all of the other directors in the organisation kind of gives you the impression of where internal audit are considered in the hierarchy of the organisation at the very top. So that's an encouragement, a kind of an encouraging position. Okay. So talk about independence. Threats must be managed at all levels, and you can get, as an internal auditor, challenges in that area. We escalate through our lines. Certainly, we talk about pressure that can be applied, and that can be pressure around relatively small elements of the scope that we're going to look at. If we consider, and because we consider that we're going to be the ones who deliver the audit engagement, we know the scope areas, it's our decision based on what it is that we cover as far as scope's concerned. We would escalate those ultimately through the audit committee to the board level if we consider it significant enough in terms of restricting what it is that we're looking at. And I'm quite happy for you to do that. You're not allowed to look at that. Unless there is something specifically that is covered by another assurance provider or a co-source element of your audit function, which sometimes might be quite a technical or specialist area, and that should be documented, of course, in the charter around your responsibilities. Those threats to independence should be managed and escalated as we go. Okay, objectivity we talked about in terms of that kind of unbiased mental attitude, following the evidence we talked about, didn't we? So no quality compromises, no compromise in terms of the testing we're doing, within the parameters of we have a certain number of days that we have available for testing, so we need to decide on how many cases, for example, we're going to look at how many transactions. We're not subordinating our judgment, and the thing that backs us up on that is, number one, our independent mental attitude, but also the fact that we've got those reporting lines that we can call upon, that functional administrative separation, and again, threats to objectivity at all levels. One of the big things around objectivity, particularly that we're interested in, is about it from our own perspective. If we have appropriate reporting lines, and if, you know, that's generally gives us the route if we need to escalate, you know, the ways in which we can escalate issues that we are concerned about. But it's very much about what we talked about yesterday in terms of I worked there previously, or I designed that particular system, or I did some consulting activity on it, so therefore I might, you know, I raise a potential conflict of interest. My partner, friend, works in that area, so it might mean that it's difficult for me to be fully objective, or those are the types of, and that's just a discussion that you would have with your supervisor, line manager, to make sure that you are fully objective. Following the evidence helps us to do that, but of course, as part of the evidence that we find from our testing and our interviews, etc., there are areas where we are then making an evaluation, aren't we, on what we think and how significant we think that is, and that's where objectivity is really important. In terms of that, as I say, organisational, we're talking about how we report. Annually, the Chief Audit Executive, your Chief Internal Auditor, should declare that they are quite happy with those reporting lines, that they are maintaining organisational independence, and that exists if we have that functionality reporting to the board, direct and unrestricted access to the board when appropriate and when necessary, and then we report administratively to the CEO or another senior director. Key issue is that we control, as I said before, the scope of the work that we cover, the performance of the work, and the reporting of results without interference. I've highlighted those three, well, some of these areas, because that's some of the wording that you could get asked questions about. If you were doing a multiple choice exam, for example, there are three areas that internal audit should control, be in charge of, be aware of. So that's quite a nice one. I've just got to think of one that you don't need to be aware of or concerned about, which gives you the four options in that sense. So that's our key issue around we decide the scope. What does it mean in terms of functional reporting? This would involve the board in doing a number of things. And when I talk about the board, I'm also talking about the audit committee as a subcommittee of the board, because often some of these responsibilities are delegated to the audit committee because the board hasn't got the time to cover lots of different elements in the depth.
So when the IA refers
Yes.
to the board, it's referring to both the board of directors and the audit committee.
Yeah, so, yes.
Unless explicitly said otherwise.
Yes. When we're talking about an audit committee, I'm talking about board level responsibility, because
Yeah.
really the audit committee will be, if you have an audit committee, you'll have 2 or 3 non-executive directors who are the audit committee.
Yeah.
Generally 1, if not all of those, will be on the board anyway, because you'll have your remuneration, your nominations committee as well, of course. So yes, but I'll often talk about the board, and so the answer to your question is yes. Okay. I'll try and answer the questions with one word, if I can. So approving the internal audit charter, the risk-based internal audit plan. Often that will be quite a detailed discussion, because it will mean there will be things on that risk-based plan that you've put together that the audit committee or board will be, actually I don't think that that's necessary this year, we did something last year, or actually there might be areas where I want you to cover that you haven't put in the risk-based plan. Generally an experienced chief internal auditor, chief audit executive will have had that discussion with the board, chair of the audit committee members, to say, what is it this year that you consider? Here's our risk-based panel. These are the areas that we're looking at delivering on. Are there any other areas, hot topic areas that you might want us to consider as well? Approve the budget and resources, as well as receiving communications from. So this has summary assurance reports. You might sometimes see it written as, in terms of, on a quarterly basis, the audit committee will meet. We will provide a report which talk about, generally thematically what we found. If you've got more than 5 or 6 internal auditors and you're doing more than 10 or 12 audits a year, which you will be, that's where we get into the summary, and you might do it by theme, risk area, you might do it by business area, but the report will be a summary of what we found in that period, generally quarterly. But within there it'll be things like, how well are we doing in terms of delivering our plan that you've approved and given us the resource and the budget for? How well are we doing in terms of how many recommendations have been made? How many people are going through training? Lots of the metrics that we might think about in terms of demonstrating how well we're doing as an internal audit function. Is it a bit chilly in here? Would you, James, would you turn that, just press the green button, or the green light. I thought Panos was getting up to help you then. You'll be fine, he can do that himself. Also the remuneration of, decisions around that, and removal of, if necessary, the chief audit executive, and making appropriate inquiries of management. Generally, a chair of an audit committee will sit with the audit report and will have read it, of course, before the meeting. Will turn to chief exec, finance director, whoever is representing executive management at the audit committee, not a member of, an attendee. The members of the audit committee are just the non-executive directors, and say, what are you doing to address this weakness or this issue that internal audit have raised? The really good audit committee chairs basically do that. If a chair of an audit committee isn't asking those types of questions, making appropriate inquiries of management, then maybe they're not fulfilling the role as the chair, and they could do with some help in terms of what the role of the chair is. I'm sure yours will do that. And also whether or not, are there any areas where, and I mentioned about that independence, and are there any areas where we've been restricted in the work that we can do, and for what reasons? So not necessarily at the meeting, because if we've escalated something to the audit committee or to the board around where we're concerned that we haven't been provided with the access that the charter gives us, or we've been restricted in terms of the scope of the work that we can do, then that's where we would escalate to the audit committee or to the chair of the audit committee or to the board as we go. So there's a number of things that that functional reporting will cover. Administrative reporting is basically what any line manager would do for you as an internal audit, your chief internal auditor. So providing information flows, signing off, writing reports, performance reports, signing off reports, talking about budgets, etc., and training needs and all of those things. And that's what somebody from the executive team generally does under the administrative reporting. I think that's enough on. So that's the diagram, isn't it? So interestingly, so your admin reporting is to the chief executive, your functional reporting is to the board. Okay, so this is how we demonstrate objectivity, possessing the unbiased mental attitude, so not going in with any particular agenda in terms of what we're trying to achieve, not had authority responsibility since within 12 months, within a year, or a reasonable time frame, and that's that consideration around if you've designed the system, you're probably not going to be objective even if it's 18 months or 2 years, or there'll be a challenge to be objective. So what's reasonable? And that's really from your discussion with your management team to say, yeah, I think I can be objective or I can't. Because we talked yesterday, if you've designed the system, you're going to go and audit it and it's going to say, it's fantastic. That was perfect. Which I'm sure it probably would, but that's where the reasonable time frame comes in. It may be that 6 months is enough. You're only in there for 5 months or 6 months, so actually I don't need the full year. The idea really around that is about declaring a potential conflict of interest. Look, you know I worked there for 3 years, I'm coming back to audit you because it's considered I'm the best person to do it, which is very likely that you would be, so therefore, are you content in terms of my objectivity? That's best to get out of the way before you start the work rather than in the wash-up meeting or the close-out meeting when you're presenting the findings and the manager says, well, you're just saying that because you used to work here. That's really what we're trying to avoid, that kind of, not an accusation of, but an inference that there's a lack of objectivity. You never liked working here, so you've given us a bad report. That sort of, a good way to get our own back. Abiding by the Code of Ethics, and not just the 4 elements of the Code of Ethics, but also those rules of conduct within there. No operational responsibility for the area activity under review. In lots of admittedly smaller organisations, often the internal audit team are now, or the chief internal auditor, the chief audit executive, now responsible for other bits. So it might be that you are responsible for kind of the fraud, internal fraud investigations, or sometimes performance measurement, measurement, quality assurance sometimes gets put with internal audit. So that means it's quite a challenging area for internal auditors to objectively review, or certainly if the chief audit executive is signing the report off and it's their area of work, to go in and do an objective review and to be seen as being objective and independent can be quite a challenge. I don't think that's the case here, but it could be a case in a scenario in a question in a multiple choice exam if one came up. So how might you overcome that? How might you overcome that? If I'm responsible for internal fraud investigations, and the audit committee decide that they want to do a review of internal fraud investigations process, what are my options? Do you understand the question? Sorry? So I will declare my potential conflict of interest, and they say yes, there is a conflict of interest, therefore you can't do it. What are my options then?
on a different audit.
Yeah, well, I could do a different audit. But I still need to do the audit, so my options might be that
Oh, you don't do a certain section or something like that?
I could do some things where I'm not responsible management-wise. I could get another team, I could buy some resource in to come and do it, so somebody from outside might come and do that particular piece of work. I could give the management of that to somebody not in within the internal audit team, so who might have some experience in the business. In Barclays, you're going to have senior managers who have got the experience of doing audits at some point in their careers anyway, so that could be an option. But basically it's taking the management and the leadership of that particular review away from internal audit, because it's quite hard to be objective of areas that you manage. It may be that, as you said, Zara, that you decide that the audit committee are quite happy that there is we've declared the potential conflict of interest, we'll keep an eye on it, but we'll still want internal audit to deliver it all the same. The challenge then comes is if there's quite a lot of things, should we say, room for improvement in that area that you as the Chief Audit Executive have been managing for the last 5 years. And your audit team are reporting to say. Sometimes what will happen in that circumstance is that you will report directly to the chair of the audit committee rather than to the Chief Audit Executive. So instead of through your lines, the manager who's running that review will report directly to the audit committee. That's a way of getting around, managing that complication. In Barclays, does the Chief Internal Auditor, which is what you call the, what's the person's name?
Sally.
Does she report to have any other responsibilities other than internal audit? So because I've heard it BIA, so Barclays Internal Audit, so it's not Barclays Internal Audit and fraud or anything like that then, so no other it's probably enough going on in internal audit. How many internal auditors are there?
600.
No, it's a lie. We don't know.
We don't know?
It's about 600.
Yeah.
About 690.
No, that's not right.
That's how many people are signed into.
Over 500,
Yes. Over 5.
but less than 1,000.
Yes.
So that's probably enough for anybody to be managing without worrying about doing something else as well, isn't it? That's a lot of people. That's worldwide.
Yeah.
Yeah.
Wow, that's a number. The biggest, I suppose, how often do you interact with those? So how many are in the Northampton office?
About 20.
Oh, right.
Because we've got 3 teams, about 20.
Is there a big Barclays Centre in Northampton, is
There's
there?
a Barclays Card Centre.
Oh, right, okay.
So I work for Barclays Card.
Okay. I have a vested interest here, by the way, because I've been banking with Barclays since I was 18. So,
We can't give you anything.
I don't want anything.
Yeah, just search for material gifts.
You give me the security to know that my money is safe in your hands. Can't give you anything. Is that what you people do when you're out socially and somebody says, "Oh, I bank with Barclays." That's your answer. I'm sorry, no, I haven't got the credit. I haven't got the corporate card with me, so I can't. We can't give you anything. No umbrellas. No.
Is this on tape, is it?
Yeah.
Yes, yeah.
Maybe I can look at that.
Which is good because I would have to put it into my gifts and hospitality register, wouldn't I? So now I have zero acceptance. That was just such a bizarre response to I bank with Barclays. Can't give you anything. Avoiding bias, independent review of engagement results as well, and that's really that independent review. In terms of objectivity, is your line manager or your supervisor, or your audit manager, or etc. etc. But also, I know you have a QA team or a team within the organisation who will regularly do peer reviews or reviews of whether or not you've followed the process and whether the conclusions you've drawn in your reports are matched, kind of linked back to the evidence, and whether the evidence links back to the testing results. That's part of, and that links with another standard, doesn't it? What's the other standard that process links with?
1200.
And,
Oh no, wait.
And one- 1300.
Quality assurance and improvement program.
How many times have I said that? Just have 100 in your head now. You know when you do it. 'Cause that was but it's not. Yeah, 1300 quality assurance and improvement program we're going to look at covers that internal assessment, and having a big unit in terms of a large number of people means that that's generally something done independently. Smaller internal audit functions, because we're not just talking about Barclays, we're talking about kind of the syllabus area. Smaller units generally do that through. I will get Panos, who's a manager in looking at another area, to regularly review the work of my team, and I will do the same. I will reciprocate that, and we will do that independent review because we haven't got the numbers that we need for a completely separate team or division within internal audit.
But surely in that example, if you're doing each other's, then you have incentive to do a good review for each other, right? In that sense.
But what about objectivity?
Yeah, but don't
Friends though.
you have an interest in
Well,
terms of...
I wouldn't say we're friends. I mean, we get on okay, but it's certainly a challenge because. But then you could say the same argument about managers, couldn't you, in the business? So when I'm doing my audit, I give them a good review, because then when I send my satisfaction questionnaire to them, they give me a good bit of feedback. We don't think about that particularly, do we? Do you send with your final report you don't send a customer satisfaction questionnaire?
We can ask for feedback.
Sorry?
We can ask for feedback, but it's not that good of a thing.
That's for feedback, but we're quite selective with how we do it in case, yeah. I like the idea of a customer satisfaction questionnaire. I've done a report, and here are 10 questions about the audit process. You know, were the objectives, scope of the audit explained to you? Did you get the opportunity to contribute? Was it delivered on time? And then you usually get a question that says, overall, what was your level of satisfaction with the audit? It's a good thing to report to audit committees. There's two challenges with them. One is getting them back, because directors generally don't like to, or sometimes don't send them back. And the other is that often that could be linked to what we've said about them, which is kind of where the point is. So you've given somebody a limited or low level of assurance, what are they going to put on the form? If they put that you've done a fantastic job, then they're accepting or admitting to a wider audience potentially that they aren't very good at their job because you found this, or you found lots of weaknesses. If you give them a high level of assurance and they say you haven't done a good job, it sounds like maybe they're not very good, but we just haven't found it. So it's kind of, sometimes it's linked like that. There's a maturity, you're right. Is it fully independent? Not necessarily, but what your external review will do, that you have once every 5 years, will look at the results of that. And if I've done some work and Panos has reviewed one of my staff's areas or audits, and it's found that he has been, because we're friends, less than objective, then that's quite a significant finding in terms of our credibility. So there's quite a lot of credibility for it. You generally tend to find it's the other way around. It's where managers are quite in the internal audit. Not being deliberately critical, but certainly following kind of the letter of the rules or the rules that are listed. But there is that danger. There absolutely is that danger. How do we maintain it? Regularly asking or periodically querying internal audit staff. Do you feel that you've been working in that area for too long and that you've lost your ability to be objective in that sense? And making sure staff move around regularly. Some of you were saying that you'd been in units for 6 months and now you've moved. Is that I know that's slightly different.
Just part of the grad program.
Is that, so you're going to have 6 months in each team to get an idea of the different teams? Is there a team that you're all... Would you just... So I didn't... Not in terms of, oh, these are fantastic areas, but the opportunity to be busy, and especially when you first started and having a constant flow of work, is kind of what you're looking for, isn't it? And it's actually quite challenging for an organisation taking on a big group of trainees. We had at any one time when I worked for the Department for Work and Pensions, we had 45 people going through the training programme. But they were taking sort of 10 or 12 a year over a period of years. So you would have people going through. And the first 2 or 3 years that we did that, we struggled to find work that they could do, and we made some adjustments to our costing and budgeting models that rather than, oh well, I can't have a trainee on that because I've only got 10 days, it was we'll class the trainee days as slightly different, or the new starter days as slightly different, so that we don't restrict the audits that they can look at. Because actually, it doesn't take long, certainly for managers, and I used to like having new starters in because you get fresh ideas. And yes, you have the extra admin of making sure that they are constantly busy. And if they're not constantly busy, you sit and they're sitting quite glum in a corner. And what you want is them to be productive as well as, you know, learning the process. Glum's a good word, isn't it? So, you're doing your 6th month or your rotations anyway, so at this point it's not an issue around, certainly around objectivity, but if you have then specialised in a particular area and you've been working in that area for 8, 9, 10 years, there is a, or 2 or 3 years sometimes, there is a challenge about being objective. If you are dealing with the same managers, the same staff, the same processes, how can I then, you know, bring a fresh pair of eyes, a fresh view to it in terms of my objectivity? It can be quite challenging. Also thinking around what we know to be reasonable, and that bit around gifts that we had in the rules of conduct, didn't we, in terms of what we can or can't accept as well. That will kind of, and that backs up or supports our objectivity. Well, you're only saying that because we gave you an umbrella, or because you said there are no gifts available, so therefore I'm going to make sure that when I write feedback about certain members of this group, that's highlighted. So, on your tables, without drawing back in all the slides, answer those questions, please. That you will have underneath Attribute Standard 1000, there are a number of other standards. There is absolutely no reason whatsoever why that is a lowercase o, by the way. Other than Portia didn't pick it up on the QA. So, shame on you. So it goes into some more, the standards themselves go into a little bit more detail, which we've picked up as part of the slides, but then there are individual implementation guides around each of those. Generally speaking, these implementation guides are 2, 3, 4 pages long, with the front page being what the standard says, the back page being the copyright requirements, and then some content. So if there are areas when you're reading through the book and through the slides and doing some, you know, reading ahead of the exam, where you think, actually, I'd love to know more about that, or I would like to know more about that, this is where you get them on the implementation guides. There is also supplemental guidance we talked about, didn't we? And there's one actually on independence and objectivity, and that's the more practical stuff. We used to call them practice guides. What they've done on the website is, or the IA globally, they've moved them into implementation and supplemental guidance. But some of them are still called practice guides until they update them. The next time they update, they will be refreshed. So that's why that's in brackets. So again, if you so wish, there is additional reading there.
In terms of learning this for the actual
yes.
exam, would we...
The slides and what's in your book is sufficient. This is more about if there are areas that you are concerned about, you can read more. But what I've done is I've gone through these and I've picked out some of the key elements for the slides anyway.
Okay.
We've talked about.
So for example, like 11, 10.
Yes.
Would you like, would we have to know all of this in depth, or have like a rough idea of?
So a good understanding of. There will be some areas where there are, say, 3 or 4 kind of points where I'm going to tell you, make sure you learn that verbatim because, you know, that's very examinable. But generally speaking, I'm not expecting you to, is that the International Professional Practice Framework?
Yeah.
I'm not expecting you to learn by rote or by heart those 35 pages. But certainly, if you read that through 20 times before the exam, you'll recognise wording in the exam because it will come from there. Does that sort of answer your question?
Yeah.
So don't learn it all. The standards are useful to learn the wording of the standards because some of them are kind of give you the answer. The bit so far, I think, you know, learn the mission and the definition, and I think I mentioned as well the rules of conduct around the code of ethics are very useful. But again, not so you can write down shall not or shall do this, but so you can recognise where each of them, you know, what are the ones under integrity, what are the ones under objectivity, etc. That's useful. Okay. Right. Yes.
So about the implementation guide,
Yes.
does it refer to the implementation standards?
Oh, I see. Yeah. So so it's implementation guidance is about how you would implement the standards. So the standards that are underneath. So where you've got so not really.
Okay.
And that is an excellent question. Yours is okay, but that's excellent. So where you've got your attribute standards, and then underneath that it kind of says implementation. This is again further detail about it. So it will refer. So because obviously it's very linked, it will reword what the standard says underneath there. Let's have a look at an example.
And is this mandatory?
This is this is classed as strongly recommended guidance.
Okay.
So on your book, recommended guidance is the grey. So implementing guidance and the other. What's mandatory is this. This tells you how to do, often a bit more granular in terms of how you might put that in practice. So if you have an issue in terms of direct interaction with the board, you can go to the implementation guide and look at it and see what the IIA's position is in terms of how that can be achieved. Generally speaking, it will talk about, and the standard itself says that the Chief Board Executive must have direct contact with the board. That will give you some more information about how that can work in practice and what does direct interaction with the board mean? How often should you interact with the board, for example? So if I look at the kind of the purpose, authority, and responsibility, that bit there, in terms of, let's do the one that we're talking about. So the internal audit activity must be independent of, so that's talking about kind of the headline standard. Those ones underneath there, so organisational independence, direct interaction with the board, etc., are ones where it kind of just goes into more detail. The implementation standards are the ones with the .A and the .1, which are kind of within those as well. But linked to these, so you've got, this kind of gives you more of a richer view of what those mean. I've spent ages answering that quite straightforward question. Yes.
Question. So is it like two separate documents? So we've got the standards and then the guidance?
Yes.
Okay.
Yes, it is. It is exactly that. Why don't we have a break and I'll bring one up and I'll just show you what I mean. Can we do that? I like the pat on the back, by the way. Yeah, that was good. Yeah. Okay, proficiency in due professional care. We're talking about performing engagements with proficiency in due professional care, so it's very much about the attributes that we would have. Key aspect is continuing professional development, and once you've got your CIA, you are required to do 40 hours of CPD activity, from reading, attending workshops, attending training courses, attending conferences. So there's a range of different options. The policy at the moment is that you keep your own record of that, and you may be called upon by the IA, by IA Global, to submit your CPD log. So you will, once you've qualified, once you've got your CIA, be required to do those 40 hours. Was that there? Yeah, not now. Don't worry about it now.
Maybe answer my question.
Yeah, okay.
Do you mean IAA stuff, or do you mean general?
IIA, internal audit related.
Okay,
Continuous.
so what we have to do, like at Barclays, is sufficient? Because they make us do 40 hours a year anyway.
In terms of your CPD for internal audit.
Yeah.
So if it's internal audit related, that will be exactly the same. My last organisation, when I worked for Department of Work and Pensions, we did the same. We had a CPD log that had a minimum of 40 hours, you might do more, and we use that. So yeah, so you're not doing 40 and another 40.
Yeah.
What I would recommend is, if you've already got that, is have the IIA's log as your personal development plan or your continuing professional development plan once you've qualified, because then you only have to fill it in once rather than filling in two different documents. Proficiency, possess the knowledge, skills and other competencies, and of course this links with the competency element of the Code of Ethics as well, and it's collectively having that knowledge. So it doesn't mean that every individual is an expert in everything, but as a unit, as an audit function, that we have those skills and we can call on those skills, knowledge, competencies if required, to make sure that we are able to deliver the plan professionally to the level that the organisation want to accept. So proficiency is very much, as I say, around knowledge, skills, competencies, thinking about current activities, what might happen in the future. If you've got an audit strategic plan or an audit strategy, then it's likely to identify areas maybe where a business is expanding or even contracting, where there might be acquisitions, mergers. Other skills might be required. You're taking on new work, you're in manufacturing, you're doing new product lines. So how are we going to get in place the appropriate skills to make sure that we can audit those as we go forward? Obviously you are exhorted or encouraged to demonstrate that by obtaining appropriate qualifications. Not just the CIA, there are other audit related qualifications as well. I mentioned yesterday, once you've got your CIA, you might decide, and it may be decided for you, that you're going to get your chartered member of the Institute of Internal Audit, which is the case study exams, where you do 3 case studies and you fill in a professional experience journal, and then you get your chartered membership of the Institute of Internal Audit. There is also a qualification in internal audit leadership, which is really the CMIA, but then you do an interview, a presentation to a panel of experts in internal audit and have an interview. I think that presentation's 20 minutes and the interview is about an hour, so like 15, 20 minutes and then the interview is an hour. That's the QIAL, qualification in internal audit leadership, and you'll start to see some job adverts. But also, I don't know if you're on LinkedIn, or you subscribe to some of those groups, there are a number of people who have got that. Often at the moment through prior experience, and where somebody's a chief audit executive or a very senior, if somebody senior in an organisation can put together a log of experience, but they will still do a presentation and have an interview. And we're working with the clients, with the IAA, where some people are going through the training course at CIA at the moment, and some of their senior people are doing the CPE, Certification of Prior Experience route, which has gone very well so far. I should say that. In terms of proficiency, making sure we've got the right areas covered, and if we haven't, thinking about how we might supplement the knowledge, skills, competencies that we've got if there are areas where we haven't got sufficient resources, and also thinking, or the Chief Audit Executive in a position where if we haven't got the knowledge, skills and competencies, for example, if we've got, so for assurance, we'll need to deliver the assurances because that's what we've agreed with the board. If we haven't got those skills, etc. in-house, we need to find out how we're going to do it, and there are a number of options that we'll look at. For consulting activity, it talks about declining that engagement if somebody asks us to look at something. Maybe something quite specialised in an organisation, or again, seek that from elsewhere. I worked in an organisation, financial services organisation, and we were asked to do a number of consulting activities which we didn't have the specialist skills with. So we facilitated the contracting out of that work to another organisation, for example. And we talked about dot A being assurance and dot C being consulting activity. So the standards identify which is which as you go forward. The two areas I mentioned yesterday, the two areas that the standards particularly identify are fraud and IT. And very much around fraud is that we should be able to have enough knowledge to be able to identify potential fraud indicators or red flags of fraud, but not expected to have the expertise who's somebody who is a fraud investigator, that's their main job. Same with IT, knowledge of key IT risks and being able to use what's available in terms of the technology, but not having the level of skill of an IT, somebody who is an IT auditor. And you might be IT auditors, some of you. Yeah.
Why they picked out fraud IT specifically?
So I don't know that particular question, other than I don't know why they've picked it out in terms of what the rationale was. I know it's an area where increasingly, because of the technical nature of IT, that's why, and I think because auditors were concerned that they didn't have programming ability and they were going to look at, so from the IT perspective, fraud, because it's an increasing area in terms of lots of lots of internal audit units are also looking at fraud and fraud indicators, and but just to separate out the fact that to be a fraud investigator or somebody who's specific job isn't necessarily something that an internal auditor would be able to do without further training. So, for example, for fraud, there are qualifications like ACFE, which is the Association of Certified Fraud Examiners, where you might do your CIA, but then if you're being asked to do fraud investigations, you might go through that certification, for example. Those two are probably because they are particularly specialist. You could also say you could have finance, accountancy in that sense as well, so understanding how the financial systems work in the organisation, but not necessarily being a qualified accountant, although I know some auditors are qualified accountants, so that's why those two in particular. I think there could be a range of other ones. Information security is quite big on the agenda at the moment, so you could say the same thing. What are the dangers, what are the key bits of regulation or legislation is fine, but having the expertise is something extra that you might need to do. I think that's probably also, and kind of just going back, sort of kind of thinking of the so additional qualifications are available there in terms of the ACFE, as I mentioned, and also there are IT qualifications in audit, like CISA, which is a 300 multiple choice question exam, certificate in information systems auditing, so you can get that and do your, if you thought this was a big book, you'd look to see that one. Okay, so proficiency, we have the knowledge, skills and competencies, due professional care, and it's about things like looking after the information that we have, but also making sure that we're acting responsibly in terms of our behaviour when we're interacting with staff and managers, as well as making sure that we are working in accordance with the international standards. That's one of our due professional care elements. Implications mean Things like independent objective that we've talked about already, competence, so that competency element, proficiency element, must follow up on audit findings. Whether we make recommendations or not, we should follow up on the findings that we have from work that we've done. Planned and supervised work, so that's links to attribute standard 1300 around quality assurance and improvement programme, and also the quality or the key characteristics of our audit reports. And in the standards, in the performance standards, and I'm pretty sure it's 2400, which is the communicating results, it talks about elements of audit reports being accurate, objective, clear, concise, comprehensive, timely, constructive. 7 dimensions of audit reporting, or good audit reports. Okay, so I think I've got 2 questions here that you can just write your answers down to. Let me just check the answer. No, it's a lie. There's one. Just identify which of those do you think is appropriate across a range of different activities. And we can do that in a number of ways. Occupational assignments, so those engagements that we're doing, working across boundaries. We could do that secondment, which we talked about, which Emma mentioned yesterday, in terms of going into the business and working in a particular area where we want to develop some knowledge. Training, projects, conferences, those are the types of activities. Membership in professional societies. There is a London District IIA Society that you can attend, and they will regularly host, and there's a Midlands one as well. You can regularly host mini conferences, workshops, seminars about particular topics, which are really interesting and usually pretty cheap. So for a day, generally it's around about £50 to £100. If you're an IIA member, it's cheaper. Where you can attend, and particularly if there is something that's an area where you either want to broaden some skills or it's an audit that you've been assigned to come in the future. Usually, often they might be sponsored by organisations, or the guest speakers or the keynote speakers are often from, I'm sure Barclays will put up representatives, different organisations, so you get an understanding of how different organisations might approach particular areas. So they are quite useful. The issue with it being 15 people or 20 people, it may be that one of you or 2 of you attend and then you present back the findings to the group, which is a pretty cost-effective way of doing it, and certainly something we've tried. Certification as an internal auditor, and recertification if you've left audit and come back and you decide that you're going to recertify as an internal auditor. There is a competency framework, the IIA Global Competency Framework. The next slide tells, the 2 slides on tells you I'm going to hand it out. I'm not going to hand it out because it's just more paper, but I will make it available online to you. There are 10 areas that the IIA identifies as for an internal auditor to have skills, experience, competencies on. The one in the middle here, the blue one, the International Professional Practice Framework, you would not be surprised to know, in terms of technical expertise. Governance, risk and control processes, and you defined governance, risk management, control yesterday as part of one of the exercises, and then internal audit's role. And business acumen, or insight, you could say, might be a word that you could use in that area. Understanding the business, the work, the environment of the business, its competitive environment, and helping the organisation to improve its processes, its plans, its objectives in terms of using that. And if you look at the new CIA syllabus, Part 3 now covers a section on business acumen. So that's something you'll be examined on as part of the new syllabus for CIA Part 3. Underpinning it all, professional ethics, and when you look at the document, the IA Competency Framework document, the first one covered is about professional ethics and what that means. And when you go on to do your chartered level qualification, we'll talk about, and one of them is ethical leadership, case study 3. So it talks quite a lot about the professional ethics of internal auditors and what that means in practice, and there are 15 different areas around that. Internal audit management, very much linked to the performance standard managing the internal audit activity, supervision and some of the elements of quality assurance and improvement programme. Internal audit delivery, the performance standards, how we deliver audit and the standards and the quality of work that we should deliver. Improvement and innovation, things like using IT skills and IT, you know, the technology that's out there to enhance the audit functions work and how we monitor the work, how we deliver the work. And then 3 personal skills areas: communication, persuasion and collaboration, and critical thinking. Are you all okay with what those 3 words mean? Well, obviously, yes? Excellent. Now, what would be ideal is if you had the opportunity to demonstrate that by doing an exercise and identifying some of the factors under the... And here it is. Thank you, Gary, for giving us that opportunity. Fully in-house, fully... I don't know what this... I need to say out-house, but outsourced. So, and then there are various different models along that continuum, but certainly in-house, fully resourced by the organisation. All of the management and reporting is within the organisation around that functional and administrative that we talked about. And outsourcing, 100% is everything is done by somebody else and they report in to your audit committee or board if you have one. Or you might have a kind of mixed or a hybrid where you've got the chief audit executive within the organisation, but the audit staff are from an external organisation providing the audit. Seen that quite a lot. Or you might just have a commercial or a contract manager within the organisation who's making sure that the external, the outsourced audit function are delivering as they should deliver against the targets that you've set in the contract. So there's a range of different options. Co-sourcing is this where you've generally got an internal, in-house audit function, but you need some specialist skills. So if you need IT skills, you can have a call-off contract, for example, with an organisation who can provide those skills, or different elements. I only use IT because I've had experience of that. Secondment, we've talked about where we bring staff in from outside, generally secondments for a period of time. So it might be a 3-month, 6-month secondment where somebody comes in from outside, or where we go to the business and sit and work in the business. The subcontracting is where there might be a specific individual, generally taken from inside the organisation, but it's a technical skills, for example, that we haven't got about a particular process where we think actually we're going to do this audit and we could do with somebody from the business who does that as a day-to-day job to augment or give us the technical skills that we've got in there. So that's the kind of range. Generally speaking, we're interested in this type of difference. There are advantages of in-house and also of outsourced, of course. Advantages and disadvantages. And if you are working in an in-house audit team, you generally think that that's the best approach, and if you work as an outsourced supplier, you generally think that's the best approach, which is interesting on public courses that we do because it kind of separates the room quite quickly. I had that doing one of the case study exams courses a couple of weeks ago. But what we're thinking about, whichever way we populate or resource our audit plan is, what's the benefits in terms of from the organisation, in terms of the best possible delivery of internal audit services in the organisation, how are we going to manage that outsourced, co-sourced kind of set up relationship, fixing disputes if there are challenges, how we're going to make sure reports are cleared, and it can be take quite a lot of somebody's time to do that. And as I say, there are risks, or advantages and disadvantages as with either approach, and we need to think about how we can mitigate or control those, manage those to the level that we're comfortable with. As I say, there are lots of advantages and disadvantages with the in-house or the outsourced approach. Would you agree with that?
I don't know, let's have exercise.
That's a great idea. Now, hey, it's the tag team. Still our responsibility as an organisation doing the contracting to make sure that we have that service is delivering a professional internal audit service through either a quality assurance improvement programme, through conformance with the International Professional Practice Framework. And also, when we're looking at responsibilities around whether it's in-house or outsourced, what the Chief Audit Executive's responsibilities are. Have we got the right levels of competence? Have we got the correct independence in terms of reporting lines, objectivity in place? Do we know, as the Chief Audit Executive, what it is that we're trying to achieve as a function, and that each of our individual audit engagements have the appropriate scope and objectives, audit objectives that we're trying to accomplish? That is often, certainly it will be in a unit as big as your internal audit unit, delegated or empowered, delegated to audit managers, senior auditors, and making sure that where applicable we will reference that we conform with the standards going forward. Okay, that's so on each of them, this thing where I've put the key issues you need to understand as a summary at the end of each of your learning around each of the attribute standards. These are the key bits that where I think the examiner might be interested in asking you some questions. So that's why, you know, we did the can you write down what you think about, or how do you demonstrate independence, what do we mean by objectivity. That's really the same point. So what is it that that you need to think about, where potential areas for examination might come up. Right. Because I'm conscious about the 4:30 deadline that I've got, Quality Assurance and Improvement Programme. We'll do a bit of this and then we'll have lunch at 12:30. Does that sound okay? Portia and I made a choice to have lunch here. And we were very jealous when we saw you all coming in with your bags of that looked far more interesting than what we'd eaten. But anyway, so that's not a criticism. Too late. Quality Assurance Improvement Programme referred to and covers everything, you know, every element of what we do has elements of the quality assurance. Certainly the internal assessment side, which is 1311, standard 1311, all aspects of our activity, from how we're set up, individual engagement delivery, external assessments about how we are in terms of independence, objectivity, purpose, authority, responsibility, proficiency in due professional care, all elements of that. The idea of the programme that must be set up by the Chief Audit Executive is to give how well we're doing. What's the level of adherence to or conformance with the key drivers behind the internal audit, the professional practice framework, so the standards, the code of ethics, are we adhering to the definition, etc. Are we doing an assessment of how effective and efficient we are, how effectively we're delivering the internal audit activity, are we using our resources appropriately, effectively and efficiently, is another element. And are we looking at continuing professional development, but also are we looking at continuing improvement? How are we looking at for those opportunities of lessons learned? What have we done in the last 12 months that we could do better? I know you said that you don't send out a customer satisfaction questionnaire, but that's one of the tools that you can use to identify areas of improvement. There is a scoring system, a rating scale, but there are also free text boxes there where people can, or managers, clients can identify it would have been better if, or what was excellent or what was good about the service. So there are some, those are actually really, really useful if managers, clients have filled those in. Okay, so thinking about, we mentioned stakeholder expectations as part of some of the competency framework discussion around communication, around persuasion, collaboration as well. So thinking about what stakeholders need, all stakeholders, internal and external, so board members through to directors, staff, managers, as well as other assurance functions and other teams. What do they expect from internal audit, if anything? What do your regulators expect, external auditors expect as well? The programme around your quality assurance and improvement will help us to deliver that going forward. And as I say, the Chief Audit Executive has a responsibility to put something in place. Two elements. The 1311 is our internal assessments, and there are a range of different activities around that. And the 1312 is that external assessment at least once every 5 years that we'll look at as well. So in terms of the internal assessments, I mentioned yesterday, it's that ongoing monitoring of the work that you do. So if you have review points or checkpoints as part of delivering an individual audit engagement, that fits within the attribute standard 1311 internal assessments. So I've drafted terms of reference, I've done my preparation, and as part of that I've drafted terms of reference. Do you call it a terms of reference? Or what do you call it?
So the scoping memo?
Scoping memo. So a scoping memo, I draft that, and somebody, my line manager or the responsible auditor, senior auditor, might review that and make some recommendations before it goes out to the client or the auditee, that review point is classed as part of my internal assessment, so part of my quality assurance and improvement programme. So then I get some comments back, or I get oh yeah, absolutely brilliant, it's one of the best scoping memos I've ever seen. So we make that, formalise that as final. Then you might have an engagement work programme, or a test strategy, sometimes we might call it, that might be signed off to make sure that we're looking at the right areas and the right people are involved in that. And there are other steps, and you might not have them. So you might see a review point or a sign-off point at the end of your testing, and you start to do some, pull your findings together before you write a report. Some audit units will have a review point called the final evaluation review point, and that's the chance for you and others to take stock. Do I need to do anything else before I write my draft report? There might be a review point there. I do my draft report, somebody reviews that, hopefully just once, and then I send it to or discuss it with the client. Client comes back filling in the management action plan on the report, and then I send the final report out. So the review points that you will have throughout that process is to demonstrate conformance with the internal assessments process. And really that's incorporated into your audit process. So your audit process that you follow, your disciplined and systematic approach, that's what we're talking about around, and where those review points or checkpoints are that you will do. That's a typical engagement delivery, an audit delivery set of review points. There are others though, and there are other assessments. So we talked about the routine and continuous assessment as somebody is supervising your work as you go through an engagement. Then we might have something more independent or away from the actual manager who's involved, like your quality assurance team that you would have, or a team who might regularly review whether or not you would expect the manager to do, but whether you are hitting targets, whether you've spent the number of days that have been allocated. Is that just in your annual plan? It'll say engagement number 11 is going to take 30 days.
Assign hours.
so out by hours. So if you spend more than that, there might be a good reason, but generally you might need to get some kind of approval to spend more, and you might spend less if you find that you've managed to do it within the timescales. So some explanation and approval of deficiencies, or sorry, not deficiencies, alterations or changes to that, to the schedule, the number of days might be in place. But did we deliver? So I said that I'm going to deliver my final report by the 15th of August, and of course I always deliver absolutely on time. Is that the experience so far? If it is, that'll change, and if it isn't, that's typical. But if we do move those dates because of different factors that might be outside of our control, we make sure that that's communicated with the auditee or the clients who we're delivering for. Were you going to say something?
Oh, no, disagree.
You're agreeing with me?
Yeah.
Oh, sorry, that's why it looks unusual, so I just... also, whether or not we are complying with relevant laws and regulations around things like data protection, information security stuff, as well as what the regulator's expecting, and of course our code of ethics, that we are providing that objective view, that we haven't taken gifts or material, trying to avoid saying the word bribe, material gifts that might have influenced our level of objectivity. They're not available apparently. So that's part of it. So that routine. The measurement and analysis of performance, of course, you would expect the person who's leading the audit, the individual engagement, to be doing that as they go through that. External assessments, this is the once every 5 years by a qualified independent assessor. And I've got a question, I think, which talks about what the IIA certainly mean by that. A couple. Chief Audit Executive will discuss how often we're going to do it, because it says at least once every 5 years, but some might have it more regularly than that, where your external assessor will come in more regularly. They are quite expensive in terms of how much they cost to deliver, but as I say, it is a requirement of. And also whether or not the people who are delivering that external quality assessment have the appropriate skills, knowledge, competencies in the same way around proficiency and due professional care to be able to deliver it. And the external assessment generally focuses on attribute standards and then managing the internal audit activity, that performance standard, which you'll cover in CIA Part 2, and your audit process. So it depends on how many days and how much you're doing. I know that lots of the consulting firms provide the service or offer the service. The Chartered Institute of Internal Audit offer that service. I think they set that up about 4 or 5 years ago to deliver external quality assessments for organisations as well. We've got a highly qualified team delivering that. I'm not selling it, by the way, just in case anybody on the tape is frowning at me. And also, are there any potential conflicts of interest? And we'll see what we mean by that in a moment. So there are a number of different ways of doing it. External consultancy, so a fully outsourced function which the audit committee might commission, or will commission. Managers can, there is a self-assessment checklist that an organisation can fill in and identify, do you have, and what are your reporting lines, how do you, and some of that evidence that we talked about around conformance with the standards is where you can use. So, do you have direct interaction with the board? Yes, I do, and here's the evidence to say that I have it. So an organisation will do that self-assessment, and then they will get validation of the answers to that by an independent organisation, an independent reviewer. It's not like marking your own homework, because you need to have the evidence to say, yes, I've actually got that in place. Or it talks about a peer review team made up of members of 3 different organisations, or at least 3 different organisations. Okay. Things that they will look at as part of the external assessment, as you would expect, compliance with the standards that we've talked about, picking out the reporting lines, functional administrative reporting, The planning process, have we followed the planning process as set out in terms of our disciplined and systematic approach? What is the planning process? Is it effective? Have we included all appropriate stakeholders in that? Our methodology that we follow, and are we following it? So one of the things, if I was doing a quality assessment, an external quality assessment of your audit function is, I'd want to see what your quality assurance team look at. And I'd be looking at the results of their findings and using what they've identified, and maybe doing a little bit of kind of dipstick testing, identifying, picking one or two of those out and seeing whether or not the results are the same that I would get. How well do we work with key clients? What's the, so I've mentioned direct interaction with the board, but also how often do we meet with senior people in the organisation on the executive side? What's the level of competency, skills, experience in the audit team? Is there a target in terms of how many people are qualified internal auditors? Maybe not, but there might be a percentage that you're aiming for as an organisation, and are you on the path to achieving that? So it's a pretty in-depth review of everything, how you're set up, do people understand what it is that we're trying to achieve, and your staff, and whether you're following your own methodology, which is always an interesting part of it. Two questions then. Well, there's one question there, put your answer down, and then there's a table that I just want you to fill in about the difference between independent and external, or whether there is a difference between independent and external. E onwards. 25 to 35% awareness level. So knowledge and understanding is what the examiner's expecting from you. Internal control and risk. So just split quite nicely into really three. So internal control, risk, and then fraud, or elements of fraud that you'll need to do. The internal control bit's quite interesting in the sense that some of it's about terminology. So the book covers it in a terminology sense as well. So I've got a few slides which are really just here's stuff to make sure that you know the difference between. So I won't read through every single one. So there, but that's quite useful because it might be some wording on there that you don't necessarily use at Barclays, but that the IA use in terms of terminology, and vice versa. Types of control. So section A, the actual syllabus for this part, types of controls, is really helpful. This is it. So for example, preventive, detective, input, output, ... So quite open-ended in a sense. So we've kind of put together a few different looks at control to make sure you're in the best position possible. But we'll certainly cover those elements as we go forward. You remember when we talked about what do we mean by risk management, governance and control yesterday, most of you, and then what was internal audit's role in governance, risk management and control as well. So that control being any action taken by management, other parties, the board, to manage risk and increase the likelihood that we will achieve our objectives. So that's our definition taken from the glossary, which is obviously the bit at the back of the International Professional Practice Framework. Talks about different concepts of control. I also talked about a really good system of internal controls, or a system of control, and I used an acronym to talk about that, didn't I, yesterday? One person's exempt from thinking about this. But if you got it and they didn't, shame on them. Hey? ACRES. And ACRES stands for, because I've forgotten. ACRES stands for, A stands for...
I can tell what the S stands for.
You don't know what the S stands for?
I know what the S is.
Oh, you know what the S is? Shall we go backwards then? Accomplishment of goals, objectives, targets. The C is compliance with laws and regulations. R is
reliability
of information, financial information, management information.
Efficiency and
efficiency and effectiveness of operations, and the efficient and effective use of resources, and anybody but
Safeguarding.
well, I was going to let him answer because he was safeguarding assets.
Only one you need is ticket.
But why should he get to answer it if he hasn't bothered to remember the other four? That's your Control can help prevent loss of resources, so that's really where our acres comes in. So you can see, so that one there is the A from acres, preventing loss, so safeguarding assets, the reporting elements, the reliability of reporting, compliance with laws and regulations. Doesn't guarantee success, doesn't ensure that but it can help to ensure the reliability of reporting, and absolute compliance doesn't mean that it's absolutely compliant, because generally human beings get involved in things, and that's where we need people to act in the way that we expect, because some of the controls will be the hard controls, the manual controls that need inputs, the active controls that need work as we go forward. Here is the top four here are the standard 4 types of control that are covered and have been covered in internal audit exam syllabuses, different exams over the years. So they're the 4 standard types of control. They're preventive, detective, directive and corrective. These are in your book. You'll probably, I don't know if you've read this far yet. There's no, I didn't ask you to. A compensating control, which the IA terminology, is where we haven't got a specific control in place, but there are other things. So we haven't got segregation of duties because we've only got one person who works in that bit of the. But we've got, so we make sure that we are watching that very closely. So the mitigating control. Now, mitigating and mitigation is what we used to call control, generally about reducing the level of risk. But in specific terms, the mitigating control that the book talks about is reducing the potential impacts should something occur, so something like insurance. If you think about your risk responses, that's where we would probably call that the share element around risk response. Redundant control is something that you don't need anymore, or is kind of duplicating, or you've got lots of people involved in a process to sign off the 37 pence, and you think, do you know what, we probably don't need all of that anymore. Why is that in place? The manager will say, because internal audit told us to put it in place. That's generally the reason. So they're just kind of terminology to remember. Then the different levels of control, in terms of entity, the process level, and then transaction level, individual level controls. Entity being those that cover the whole organisation, or the way that the organisation is set up, and often will link to things like your control environment, your overall governance arrangements that are in place, process level controls that managers have in place, like supervision, for example, generally things like reconciliations that might be there, monitoring. And we're going to look at some models today and next week, and all of the models that we'll look at has an element of monitoring in as being one of the key drivers. So monitoring will be something that's in every one of those. And then your transaction level, so segregation of duties, application controls if it's IT systems, for example. So that's your levels of control. We've just picked out a couple in terms of the IT general controls, those overarching controls that generally cover all IT systems, like access control that you might have to get onto your IT system, your user profiles, whether or not somebody can get into a particular part of the IT centre that runs your systems, access security, change management, so I'm not changing the system without going through a particular process. So kind of those high level processes that are in place, configuration libraries and changes to those types of activities. And then down to application, lower level controls around a system, input, process, output type controls. So making sure that we're putting the right information in, that the processing is working effectively, and that we do what we should do with the output. If it's an exception report, that goes to the right person to do something because there's an issue that's been identified, for example, or that the report is stored securely. And so what are the controls around each of those? And then, so we talk about those three kind of bits of the system, input, process and output. But that's all quite basic, isn't it? And you're okay with that? Nobody's looking at me. Are you getting ready to go?
Yeah, it's just cold.
Are you cold? Yeah. It's because James didn't put the aircon on.
I've already turned it
You've
off.
turned it off. I just thought you're kind of ready to go. I mean, you know, he's on a runner. Yeah.
It's alright, look.
My train's at 20 past 6, so I need to. I've got an hour and a half. I've got as long as it takes.
Same.
Same.
I'm happy to start. Let's section 3 as well.
Well, I know we're not going to do that. Active. We will start section 3, but it'll be next week.
Oh, okay.
Active controls, really about controls where we need people involved. So where we need some action is kind of the way that active versus passive, which is an automated system generated of often control that is run. Okay. Probably the wrong example to use. He's not listening to me. In terms of a thermostat that is set to make sure that at least some people put their coats on at some point in the afternoon. And then the way the IA is starting to talk about controls. So this is quite an important one. The hard controls, which are the one. So just forget about all the other different models. The hard control, that traditional control that we expect to see, whether it's a preventive, detective, directive, input, process, output, etc., etc., but something that is there in place, like a policy or procedure that we can quantify, is what we call, I would call that control, but that's hard control, as opposed to then, certainly as we move into things like looking at integrity, ethical values, cultures, the culture of organisations, where we're talking about soft controls. So, are people living the values? And how do we ensure that managers follow or lead by example in terms of what it is that we expect from them, from our, the operating style and philosophy, the culture that we want in the organisation. So that's pretty challenging. So that's more about the application of shared values, for example. That's where we get into culture audit and those types of audits. Okay? It's really quiet on the second afternoon, isn't it? They're all worried about what you might think if they say something. So everybody okay on what we've done? That's right. Yes? You're all fully clear on... Good. I look forward to the quiz answers in a moment. Control in the IPPF, so this is the performance standard 2100. I've forgotten what that is. What's 2100?
No authority and responsibility.
No.
That's 2000.
No, that's 1000. Nature of work. 2000 is managing the internal audit activity. 2130, so we have governance, risk management and control, don't we? This is what audit's perspective is. So assisting the organisation in maintaining effective controls, which we do whether we're doing risk-based auditing or auditing under a systems approach, but making sure the controls are reducing the level of risk to the level that the organisation are willing to accept. And there is an implementation guide around that, which you can read if you so wish. Okay. Yesterday, Emma mentioned control environment 2 or 3 times, didn't she? Was anybody listening? We were all listening. Sorry, Anna. I'm sorry. So, Emma mentioned the control environment a few times, and I said, we'll get on to that. A bit like answering her question when she wasn't here, but sorry about that as well. But thinking about what the control environment is, the first bit talks about, well, these bullet points take out what the glossary talks about being a control environment. There are a number of elements to a control environment. These can be changed if you are that way inclined. I am, into a nice little acronym that you can remember. So you can reorder that. Because otherwise they've got... it is the discipline approach. Control environment is really important in terms of, as I say, the models that we're going to look at in the organisation. And in fact, why don't you do an exercise, so I don't put my foot in it any further. What are the key elements of an effective control system? That's fine. And then think about 4 different types of control and provide some examples. Don't look back at the... So I've got some stuff in there in terms of examples as well. Directive, training staff providing guidance, preventive, physical access controls. So here there's a security guard. To get past the security guard you need a pass to get in. And they rotate those security guards incredibly frequently.
Yeah, really,
you notice that?
really.
I just thought it was me. Yeah. Which is a good thing. I just wonder what they're doing when they're not there. Because there's 3. No? Is there another entrance?
No.
Oh yeah, they're doing the main building. The
The main Barclays building?
Yeah,
and that's close by, is it?
Yeah.
Stopping unwanted events, prevention works on many different levels, as it says. Detective, so bank reconciliations, if you're a cash-based company, surprise cash counts, and the supervisor comes and says, let's see what you've got in the till to make sure you're not pocketing it. Inventories as well, classed as those. Escalation can be classed as a type of corrective control because there's an issue that needs fixing. Training courses to improve performance. The thermostat, as we mentioned as well. Okay, management control techniques, and this is kind of general management stuff in terms of the management wheel, around planning, organising, leading, controlling, sometimes planning, organising, directing you might see as well, or leading, they're interchangeable. Controlling might be monitoring as well as we go forward. So thinking about what it is that we want in terms of the plan, the goals that we want to achieve, targets, etc. How are we going to organise ourselves as an organisation or a function within the organisation to be able to deliver on the goals, objectives that we've set ourselves, making sure we've got the right people in place and the right resources, so finance, IT resources, for example, to be able to deliver the goals, making sure through that direction or the leading that we have leaders in the organisation who communicate what it is to staff that we expected, to set the expectations that we have, hopefully to inspire, certainly to influence, and then to make sure that how are we achieving them? Is the organisation that we've got working appropriately by giving people tasks or roles, making sure they understand their responsibilities, monitoring what it is that they're doing, and if necessary, taking corrective action. So that's like where you would have, at the end of your audits, a review that says, yeah, you could have done this better, this is what we're going to do next time. So lessons learned are really, really important in that respect. So that's probably a cycle that you've seen in slightly different formats on a number of times. some of the ways that we talk about controlling or management control, things like the tone at the top. Mahika, or the control environment, calls that management's operating style and philosophy. But what's the tone from the top of the organisation? What do your senior people want you to do? How do you want to be? How do they want you to behave? So that's why we have things like core values. The values of the organisation. What are the values? What are Barclays' core values?
Respect.
Integrity.
Respect.
Stewardship.
Sorry, can you say that again?
Integrity,
Yes.
service,
Service.
stewardship,
Stewardship.
what is it?
Excellent.
Excellent. That wasn't Julie, by the way. Okay, so she got it. She was giving somebody else the opportunity. So look at the camera portion, don't you? No, okay, so
Respect. First one.
respect, integrity, service, stewardship,
Excellent.
excellence.
Rises.
That's it.
So service in terms of customer service, is that giving the best service to customers?
Yes.
Stewardship of their money, respect to each other and to customers as well. Integrity around what?
Doing the right thing.
Doing the right thing all the time.
All the time.
All the time.
Yeah.
So as well as those values, you will also have the structures in place, so there will be reporting lines, supervision to ensure that you are doing what is expected of you, and if you're not, then you will be challenged on that. And if you are, we will do a performance appraisal and identify areas where you need to improve or where you're excelling, or where you want to develop further. Through maybe preference. We supervise to make sure there's segregation of duties to ensure that people are signing off at certain, so that might be around authorisation limits, payment limits, for example. And then we have systems like reward systems. If you do a good job and you reach a certain standard, we will give you a bonus, or you might get a bonus. Or if you don't reach that standard, we might do something else. There may be sanctions in place, not necessarily in Barclays particularly, but certainly you will be put on notice that your performance needs to improve. And quality systems. So you've got your quality assurance team internally, but in the organisation there will be lots of efforts made in terms of ensuring the quality of. From recording calls with customers to how do we deal with complaints, through to how do we offer a better service, improvements in terms of technology, etc. So there are loads of different ways that we use, techniques we use for management control, and it's such a good list that I think you'll find that it's in the slides twice.
Yes.
There you are. It's just as a reminder, not an error on my behalf at all. What others are there? What other control techniques might there be?
Mandatory training.
Training, yeah, mandatory training.
Management information.
So mandatory training around the basics to support your values.
Anything that we want to control, I guess.
What mandatory training have you had since you joined?
GDPR.
Health and safety training.
Yeah.
Why do you have health and safety training?
So you know how to pick up a
Yes.
box.
Do you, as a part of that, you have your safe lifting as well, do you?
Yeah.
Yeah. And don't stand on a wheelie chair on one leg and take a heavy box off the top shelf. Yeah. Ask somebody else to do it. No, you don't do that. Yeah, so health and safety training.
GDPR. Yeah,
So the GDPR stuff, you've had some.
Blockchain. Blockchain.
That's not mandatory.
Yeah.
So it was.
Oh, BIA.
Oh.
Blockchain.
We talk about
It's,
BIA.
just informal.
Think for it.
What have you had? So you've had health and safety,
Anti-money laundering.
Yeah.
anti-money laundering.
Client-weighted assets.
Cash.
What's that?
Cash.
What's that?
Client- Client assets, security, and
Managing time.
Services.
managing
Yeah,
clients.
manage
How you manage
assets.
clients. What's blockchain?
I'm not sure actually.
Have you been on it? just take the tape off a minute. Sorry, that's the theoretical one. Unless you forget to log out, in which case you've got something to worry about. What else? What other management control techniques are there?
Am I reporting?
How is that a management control technique?
It's monitoring.
So like performance reporting, but management information that you get on the performance of your team or your function.
Yeah, yeah.
Yeah, and what's the most important thing in terms of that being an effective technique?
It's
Or one of the important things that you do something with it.
yeah, seen by the
Yeah.
people and escalated to senior level.
Yes, to make sure. So, as from the internal audit perspective, we are interested in what did you do with that information. It's a bit like exception reporting, you know, or risk.
And the
Yeah,
information
something that
itself.
comes out. What have we done as an organisation to address the issues that I've identified? Okay. Any others? Okay. Leadership styles. Again, authoritarian, being told what to do, or being given kind of that, you know, trust or empowerment. We used to call it delegation in the olden days, but certainly to, you know, we want you to use your brains and your abilities, your knowledge and experience to deliver for us. We don't want you all to be exactly the same. You know, we don't want robots. We want people who are free thinkers, but within a boundary, you know, of what your roles, responsibilities, your level of accountability is going forward as well. And we have a range of different styles, from the autocratic. It used to be there's lots of models around. Autocratic, democratic, laissez-faire was the one. So basically, just get on with it. You're fine. I trust you all. Not I'm a lazy manager, of course, but I trust you to deliver without me being hands-on all the time. Through to somebody who is autocratic, who stands over you like you're an 11-year-old and asks you what you're, you know, how long are you taking for lunch? What are you doing straight after? And looks, you know, and that can be quite oppressive in some ways. It's quite nice sometimes that you get quite a lot of direction if you're brand new in an area, but you want to have the ability to, you know, work on your own initiative, etc. But it might be that some people are, you know, employees look for, you know, somebody to tell them what to do, and then they like to do it, and that's one of the kind of styles. So there are people who like that autocratic leadership type or management type role. Custodial. You've got your happiness, security. That's where we talk about Hertzberg and Maslow and those types of management models around those hygiene factors. I want to go to work. I want to feel safe. I want to be warm, not too warm. I want to be paid enough so I can afford my rent and some food, obviously. But it might be that people are, I'm actually at work and I'm quite happy to work, you know, long hours, and because I think I'm going to get opportunities for advancement, or I'm going to grow as an individual, which is why you're all here doing your certified internal audit, so you can all grow as people as you go. But it might be that you like working in a team, you know, and you love the fact that you're part of a team of people, or you don't. Like that you're part of the, but your contribution is recognised. Different styles. In terms of the style that you might have against those four, how do we manage? You know, if we are in an autocratic, generally that's where policies and procedures will dictate what it is that we expect. Internal audit's role will be more of a compliance role. Are you doing what you're being told to do? So not compliance around laws and compliance around the policies and procedures. We are going around with a checklist to make sure that staff are doing what they should do, so more of a controls focus. we'll be interested in how effective the policies and procedures are and whether staff are adhering to them. All the way across to we set our values, our mission and our vision of what we want from staff in the organisation, and we provide more of a consultancy type role about how we can measure that, how the organisation can demonstrate that. But there will be frameworks in place, and because we're talking about control, we'll talk about control frameworks to make sure that we have the right control environment, that our risk assessment processes are appropriate, and there are appropriate controls to manage those risks to the level that we're happy to accept, or that we have identified that we are happy to accept. It wasn't that great what I just said. But, okay. 14 minutes.
43.
Yeah. So kind of be not 3:30. So there's a little video on internal controls which I'll just show you. Through the COSO internal control framework. So the 5 elements around control environment, risk assessment, control activities, monitoring, information and communication, the 5 components of COSO are what that video talks about. We have control frameworks to put in place to control, making sure, or giving us the opportunity to make operations successful, protect our resources, comply with laws and regulations. So 3 elements of my ACRES model certainly fit very nicely in there. They are policies, procedures, etc. that we have, work instructions, guidance for staff that we have in place, as well as then those less tangible things like ethical values, the values that you have that we talked about before the break. And we want to contain our risks and our risk tolerances and our risk appetite, and help us achieve those objectives, help us accomplish the business objectives that we have set. These are the ones, the internationally known control frameworks that IAA Global have a record of on their site. So when we're talking about control frameworks, these are the ones that are that we'll touch upon. Very briefly for some of them, the COBIT, the Control Objectives for Business and IT Related Technologies, COBIT 5, it's up to the 5th version of, generally sits more in the CIA Part 3, the IT element of that. But because it's a recognised control framework, there could be a question or two on it, so we touch on that briefly as well. We're going to focus mainly on the COSO Internal Control Integrated Framework. COSO stands for the Committee of Sponsoring Organisations, which was set up in the early 1990s in response to some of the issues in financial services, some of the big companies that had problems, to try and bring together a uniform and global approach to control and control frameworks. COSO, the Committee of Sponsoring Organisations, has representations from major bodies such as the IIA, as well as some of the accounting firms, some of the big consulting firms as well. So that's the one that we will focus on today. But when we look at each of them, you'll see that the objectives or the drivers behind and the components of are very similar, because they've all developed and trying to develop a uniform approach, but might focus in slightly different areas of industry or sectors of industry. So the objectives around COSO, which was updated in 2013, effectiveness and efficiency of operations, reliability of financial reporting, compliance with applicable laws and regulations. So you'll see that from those 3 elements that we've looked at, or the 3 objectives around that ACRES system of internal control. 5 interrelated components. I've got it in a triangle. I've always, because in your books it's in a cube. The reason I have a triangle rather than a cube is because the COSO enterprise-wide risk management model is a cube as well, so just to differentiate, although you'll see most of the elements are the same. In fact, the only thing that's different, although there are 8 components in your ERM, your enterprise-wide risk management model, and there are 5 here because information and communication are one component. I've just shown them differently because what we need is information in at all the levels possible and communication out, so reporting out, as the video talked about going forward. We know what our control environment is, don't we? Management's operating style and philosophy, organisational structure, HR policies and procedures, our MOHICA model. And we've talked about risk management, and risk assessment is an element of that. So we're identifying, measuring and evaluating risks. What do I need to do? I need to do anything about that risk? If I do, I might need to put some control activities in place. But certainly I'll need monitoring and I'll need reporting. So I'll need some information and some communication as well. And that's really the model. So those 5 elements are ones to learn. Not only because they're really important, but also because they are represented in lots of the other models, as you'll see as we go forward. So we've talked about control environment. Identifying, analysing and managing risks is what we talk about in terms of risk assessment. Control activities, policies and procedures, supervision, segregation of duties, physical controls as the video talked about, anything we do around control and control activities, and there can be different types of control, preventive, detective, directive, etc. So that's where the control fits into the model. Capturing information and exchanging information, or capturing information and then making sure we report or communicate the results of what we've got out of those, and then monitoring, some kind of embedded process in place to monitor and then to do something about it. If there are changing conditions or if there are areas where we want to improve, that's where the monitoring will come in. Monitoring, again, will be in all of the models that we look at, mostly. As well as the 5 elements of COSO, there are key principles, which really just give some granularity and detail around what we've talked about. So around control environment, there is a demonstration that what is expected is that the organisation has demonstrated a commitment to integrity and ethical values, that there is oversight responsibility, and that's part of our organisational structure, it's part of our assignment of authority and responsibility as well, enforces accountability. That's quite a useful thing to be aware of going forward. That would be one slide that I might put an asterisk next to and just think I'm going to learn those. So COSO, I'll talk about COSO again on Tuesday. We're on next week. When we talk a bit about enterprise-wide risk management and the comparisons between. COCO model, Criteria of Control Board, which was developed by the Canadian Institute of Chartered Accountants. So COCO was set up by Kika. Okay, doesn't matter. So the Criteria of Control Board has 3 objectives: effectiveness and efficiency of operations, reliability and integrity of financial reporting, compliance with applicable laws. Do you recognise those 3 objectives from anywhere? The 3 objectives pretty much that COSO's internal control framework has. There are 4 interrelated components. I would say, because I'm being videoed, I love the COSO model, but what I like about this one, the Criteria Control Board model, is that it shows it as a flow, as a process where the monitoring and learning is actually fed back into the purpose, what we've set up, why we're having that, or why do we have a control model. What is it, do we need to change anything around objectives, around what it is that we're trying to achieve? The commitment from the top in terms of senior people signing up to, this is what we want to do and want to achieve, making sure the resources are in place, both in terms of people, the finances if necessary, the structures are in place so we are able to manage our risks or manage our business appropriately as we've identified that we want to. Do it. So actually, what is it that we're doing? And take some, I suppose that's where you could put your information and communicate information in. What is it that we've learned from our monitoring? Continuous improvement, feed that back into the purpose element. So that's the COCO model. You might recognise there are 4 interrelated components, which might lead you to think that that's quite examinable in that sense. Is that okay? Should I just keep going? Until somebody looks really confused. Okay? Or more confused. Okay. COBIT 5, control objectives for information and IT related technology. Best practices, provides with generally accepted measures, very well used, very well known model, 5 principles, 7 enabling principles. As I say, it fits in this syllabus because it's a control framework, but I think it sits more comfortably in the CIA Part 3 syllabus because it's IT related. So, but there is an absolute chance that you could get a question or two on COBIT. It might be very down to the extent of these control frameworks, which one relates to IT. Is a perfectly acceptable question. Portia, can you just pause that for me just a moment? I'm not sure why I keep jumping back there. The 5 key principles around COSO, you'll see it's a very much an entity-wide approach. Thinking about what stakeholders want and how we're going to meet their needs, looking at the organisation end-to-end and integrating IT with business delivery rather than as a separate entity with that single integrated framework. How are we as an organisation going to achieve our objectives rather than how is the business going to achieve objectives and what are IT going to do to sort of help them? And depending on where you sit, business or IT, you'll see one as an inconvenience rather than something that you are there as an enabling function, and that's why it's this holistic approach, this end-to-end approach. Separating governance from management, so the IT team is managed, but there is a separate governance function. So the senior executives in IT aren't the ones who say absolutely everything's fine. Sometimes that's moved into audit committee or into another subcommittee from board level with representatives from across the business to ensure the business has a voice in what IT are doing. And that's really where kind of the principles point to. There are also 7 enabling principles around COSO, which we've talked about in various forms in terms of principles and policies, so policies and procedures, frameworks that are in place, how we transfer information, the structures, do we have the capabilities, and that's what COCO would refer to, and also then the specifics around what is it we're trying to offer, what services, infrastructure, what is it we're trying to deliver as a business. And just because I thought you didn't have enough lists to think about, there's also some security, 10 security objectives that COBIT system looks for that the organisation are trying to achieve. So for those of you in IT or who've done IT, you've come across COBIT and probably lived with COBIT for a while, but talks about mainly the steps around. If you are interested in IT and a bit more, there are some global technology audit guides that are, I think some of them have been now incorporated into some of the implementation guides, but they separate out and they cover things like how we manage IT from and what is it that internal audit might look for. But they're probably stuff to look at as part of Part 3 rather than CIA Part 3 rather than you may have a feeling you've got enough to be getting on with at the moment. But if you want more to read, then that's where it is. Okay. Answer that question and then I'll ask you the answer. Basel framework for internal controls has 5 interrelated elements, which is one of the next ones on the list. You might recognise some of these in terms of management oversight and the control culture. What other phrase might be used for that?
Governance.
Yes, 2-word phrase, a 2-word
Risk management.
control environment. So things like management operating style, organisation, HR policies and procedures, integrity and ethical values, etc. You might think about management as certainly control culture. Risk recognition and assessment you could think about in terms of risk assessment, control activities and segregation of duties, control activities, information and communication, monitoring activities and correcting deficiencies, monitoring. So very similar to the 5 components from the COSO model that we've looked at. ISO has a series of different, and you've probably come across some ISO work. The International Standards Organisation, or the International Organisation for Standardisation, which is a non-governmental, independent body that sets standards that you can sometimes, if you want, receive certification in as an organisation or as an individual. The ISO 9000 is the quality control and compliance standard that you might see. ISO 9001, which is very much about how you document and how you keep records linked to protection issues, and 27000, which you can get certification in around information systems governance and what is expected. Very linked to some of the other models like COBIT and making sure that you are able, as internal auditors, I have the members of my team who are qualified as ISO 27001 accredited people. I'm not quite sure if that's an English sentence, but who passed the exams and got ISO 27001 certification, so that and then enabled you to look at IT governance and information systems governance in a perspective and measure them against the benchmarks that ISO set. Standards for internal control in the US federal government, mentioned in your book. One of the control frameworks mentioned, there are 5 components. So this is around financial areas, compliance areas, but there are 5 components which mirror the COSO 5 components of control environment, risk assessment, control activities as well as there are other control frameworks. So that's the one that's mentioned in your book, and we've covered. There are some alternatives. Sorry, is that okay? Shall I keep going?
Yeah.
There are alternative control frameworks. The Cadbury, one of the early control frameworks, brought in mainly to focus on, confined reporting, but mainly to focus on the reliability of financial reporting that companies were doing, particularly in the London Stock Exchange, and had a number of different components. Talked about the control environment, talked about, you could say, risk assessment, could also say then control activities, information and communication, and monitoring. So it's very similar in terminology to the COSO model. And Turnbull, published by the Institute of Chartered Accountants in England and Wales, ICAEW. Very similar, but actually, although delivered by an accountancy body, widened the reporting to beyond just financial controls and focused on all risks and controls in the business. Because it recognised that there are, it's not just about finance, there are lots of other risks that need to be focused on. So looking at significant risks, so rather than just financial risk areas, big emphasis on risk management, introduce things like risk appetite and assessment around risk appetite and what risk appetite is, the ongoing continuous monitoring, entity-wide, engaging all employees, and streamlining the risk management databases. What was happening was that people were talking, companies were looking at risk and risk management, and each part of the organisation, depending on their particular view or the advice that they'd received, were setting up a risk management system, which is great. But finance had their risk management system, operations had their risk management system, marketing had theirs, and then what you had was just lots of different risk management systems that didn't talk to each other, or where you couldn't aggregate, pull together and lift the risks up to board level or senior levels, so you didn't have that entity-wide view. So the idea was that we'll have a single view, and that's where we are now with the enterprise-wide perspective around risk management. One risk management system, one method of method of scoring or assessing the risks that we have in the organisation, rather than multiple ones that we can't therefore do a like-for-like comparison with. So we don't know what the significant risks are in the organisation because they're all scored differently. Which seems like common sense, doesn't it? But at the time, not that there was a lack of common sense, but people were identifying that, well, actually that's a more appropriate system for my type of business or my function within that type of business, rather than a more joined-up approach. And then just a couple of others. There's a King report. There have been 4 reports by King, very similar to the UK Corporate Governance Code versions, of which we're now into UKCG 2016, that had principles around. But 2016 King 4 have to comply if you are listed on the Johannesburg or the South African Stock Exchange. And had moved away from apply or explain, where we have the comply or explain, to apply and explain. And that was about the extent to which you are applying the principles within our corporate governance framework, which was a really interesting move. The Australian, I don't think I've got the Australian one, the Australian Securities and Exchange Commission, their guidance says very similar in lots of ways to the King report, to the UK Corporate Governance Code. Theirs is, if not, why not? Which I quite like. I don't know whether, not to be critical, but it feels quite, Australian, isn't it? Talks about 4 particular areas in governance outcomes, which is why I've got it on in terms of the ethical culture in organisations, as well as then what controls have we got in place. But not just we should have controls, how effective are those controls? And I've just picked out around Principle 15, I'm pretty sure there's 75. Now I don't mention that. Principles, an effective control environment and how important, how significant that is. I would say that if you are going to look at the frameworks, eventually I'll get there. Those don't worry too much about the King report. I put the King on the slide because it's in your books, although it's not necessarily one that is listed, as I say, on the IA Global website as a recognised control framework. Because if you put King on, then you need to put the Australian security, and then you need to put the New Zealand, and then we get into, you need what do they have in India and China, etc. So stick with, these are the ones that are interesting, but as you've seen from that one, and certainly that one, the actual 5, most of them have 5 components, and they are all very similar to be aware. So if you did get a question on something like that, then at least you will recognise the wording. It won't be which of these, here are 5 things, which one of these control frameworks, that would be a bit too easy, wouldn't it? Okay, any questions? Now, when I submitted the slides, Porsche